Good evening, everyone. This is Henry Gamble, and in today's free video, I wanted to come back and take a look at a couple of the tickers that I had shared with you guys on Monday. Generally, Don is going to do videos on Thursday, but he got a little tied up, so I have the privilege of doing this, and I, especially in the free videos, like being able to share an idea and then follow up on it, hopefully to give you some actionable trade ideas. Now, with Ulta and Facebook, I'm going to talk about two things, and then we're going to dive a little bit deeper into Google. But I thought this was an interesting example. Granted, it's only been 2 days, so not a whole lot of time, but based off where I was looking at those markets on Monday at the close when I did these videos versus where they stand now, Ulta is almost at exactly the same price. If you take a look at Facebook, Monday's close against where we are now is almost exactly the same price. The chart that I was really going to dive in with a little bit more analysis on, and the topic of the video, is Google. Where is it at? Almost exactly where we were at Monday's close. I think that drives home the idea that we really have to focus more in this market of doing delta neutral or plays that benefit from just trading sideways and that chop, and this is a really good example of it. So when we looked at this trade idea first, I shared the idea of putting on the iron condor. I think that is still working out great, and if we kind of look at some other modifications to it, there's kind of the high probability, a little bit higher risk trade, shorting the 700s and shorting the 600s. It's great to see it kind of revert back for us today, but then also because I have a little bit of a bullish opinion on Google, tacked on some short put spreads when it came down into that 630 level. And then one other trade that was more neutral around 630 with the iron fly. Now with the iron fly, if it just keeps ripping higher, then like say for example it closes at 650 tomorrow, then I'll lose money on that trade, but it will be made up for from the additional put spreads that I sold. So it's taking this concept, adding a little bit more leverage to the bullish side of it, but still taking in good time decay as well. If Google trades sideways, that's great. If it trades up, that's great. And if it trades down, well, of course, I always want to make sure that our risk is defined. So I think that's a great way to play Google over the course of the next 16 days. The trade is absolutely still in play if you would like to get it. And then one last kind of passing thought with Google. Notice how it's held this fire line here and the 50-day moving average, at least on the second test of it. So it's kind of like, I wonder if it's finding its footing there. Then we come back to the weekly chart, and I love the way it has recovered the 10-week moving average and is trying to close above it. This is all showing me signs that Google is trying to catch a bid, and then I'm ultimately just very interested in what this monthly squeeze does. So obviously I am not coming out and just buying this. The market as a whole, if the S&P's plunge back down to 830, Google's going to go with it. But if we do start to find our footing, just keep an eye on Google in the months and years to come. So I hope you guys find that helpful. Have a great rest of your night, and I will see you at the next free video.